Welcome to the second episode of Peep the Portfolio with your boy, Mar. We're going to be talking about SCHH today. Before we get started, I just want to let y'all know this is not any type of financial advice. This is just me sharing what I'm doing with my money to grow my wealth. If you learn something, great. If you don't, take it with a grain of salt. It's your world. You can do whatever you want with it. That being said, SCHH. Now, what is that? It is a Schwab U.S. REIT ETF. I'm sure you already heard ETF. You already know what that is, right? It's a basket of stocks that you can invest to all at once. Now, adding another layer to that is a REIT is a real estate investment trust. So it's pretty much like ETF, but it's all companies that own, operate, have some form of involvement with real estate. This is my main way of investing in real estate until I'm able to invest in my own private projects. Now, this helps me avoid any large down payments of 20, 30, 40, 50,000 at one time to invest into a project. I could still dollar cost average into a REIT like any other stock in my portfolio. So right now, SCHH lets me own a slice of U.S. commercial real estate without needing the upfront capital. But another thing it does is it allows me to hold more than 120 individual REITs, giving me instant diversification across many of the largest and most established real estate operators. Recent data shows that 123 to 125 total holdings, with the top names include Prolongis, Welltower, American Tower, Simon Property Group, Realty Income, that O stock that everybody is really familiar with, and Equinix, and many, many others. Through these holdings, I gain exposure to multiple segments of the real estate market: industrial, logistics, healthcare, senior housing, which is huge in Lancaster where I'm currently living, and many other things like retail malls, strip malls, net lease retail, all that good stuff. It allows me to hold all those things without having to take my money or an investment partner's money and take 50, 60, 100K to go invest in these properties. So SCHH is also designed as an income-oriented ETF. So that fits my goal of building a portfolio that helps me get active cash flow right now that is passive. So I put my money in, they pretty much pay me for investing in their country. The fund currently yields around 3% trailing 12-month basis and has paid out 65 cents per share owned over the past year. So if you own 100 shares, you can do the math, you're getting paid about $6. The distributions are paid 4 times per year, so it still adds a steady stream of real estate driven income. As SCH grows, around 15% of my portfolio has been allocated towards SCHH. It is my second largest holding because it's geared towards that active income now, passive income now. So as I grow in my position in that, it'll pay me more and more without me having to put any time or physical work into the asset. I love the active investing for this portfolio specifically. I have other portfolios where I have my 401k and my Roth IRA where I'm gradually building up long-term growth, value growth assets. But with this portfolio specifically that I'm holding within JP Morgan Chase, I want to create as much income as I can. And you'll see that in my further videos where I'm talking about JEPQ and some other active investing covered calls. And right now I'm learning the wheel strategy. So hopefully I'll make a video about that someday. But yeah, this is just my second largest holding. It's about 15% of my portfolio. SCHH, again, is a U.S. REIT ETF, allowing you to diversify your investments in real estate without having to buy and put up a bunch of upfront costs in a private property play. Thanks for chatting with me. Next video of Peep the Portfolio. See you then.